Today you have my permission to start with it.
Okay, thank you, sir. Okay, good afternoon, everyone. And I think from so there's good morning because some people join us from outside the shore of Africa. So good morning, good afternoon, good evening, wherever you might be listening to this webinar after now. So you're welcome to our regular meeting of the Guild of Pediatric Practitioners in Private Practice. And today we have something slightly different from the regular clinical meeting, and I'm sure we'll all benefit. The ground rules, please, if you are not speaking, please mute your mic. And then during the course of the seminar, if you have any question, you can type on the chat box. And during the Q&A, you'll be also allowed to unmute to answer, to speak if you want, if so desire to speak at that time. The recording, like you know, will be available after now on our YouTube channel, so we can still watch after now. So I'm going to yield to the president of the guild, Dr. Letu, to just start the meeting. Dr. Letu, over to you, sir.
Thank you very much. Thank you to each and everyone for this call. Like I told today, this is a meeting that we all need to pay attention to as we benefit maximally from it. I am at a wedding, so you'll probably be hearing a lot of noise in the background. Please pardon me. Please let us listen carefully to our presenter. Today we have to
Thank you, sir. Well, like I said, today is a different menu that we are bringing to the table, different from our regular clinical meeting. Today we have a special guest, a very personal friend who will come a long way. But like I told him, I won't tell him the secret that is between both of us. But if you want to know the secret, you have to pay me for that. So the speaker today is none other than Sir Adegbenga Badijo. He also has a honorary doctorate degree. He holds a BSc in geography from the University of Ibadan, and he was one among the top students in his class. He's a fellow of ICANN, CIT, and that is the Chartered Institute of Taxation, NIM, a member of Chartered Institute of Arbitration, and registered SEC capital market operator. He is also a certified forensic auditor, certified corporate finance practitioner, usher of Chartered Institute of Directors, and alumnus of Harvard Kennedy School and Lagos Business School. So he is a managing partner and CEO of GBT Professional Services and Benga Badijo & Co., a corresponding firm of Render International. So that is a part of a bigger network that spans many countries or jurisdictions. So he is the best fit for this program. I also know from our personal discussion that he also helps some hospitals to navigate through the kind of things he's going to share with us. So he has over 40 years experience in this in audits, taxation, forensic audit, mergers and acquisition, corporate governance, and insolvency. So my friend also is a Knight of John Wesley. He held leadership roles in Rotary, Nigerian Business Chamber of Commerce, Lagos Business School Enterprise Development Center, and Methodist Church of Nigeria. So he's a devout Christian. He enjoys traveling. He plays golf, squash, and table tennis. I've told him he's going to pay my my subscription for golf. He can have golf course. I'm sure he won't say no to me, so I can come to bond with him. So today, please just open your heart, and your question you can put on chat box, and afterward we're going to have a robust discussion afterwards. It is unusual, but I believe that we all benefit maximally because there are policy in government that we as doctors need to know about and how to navigate finance. So over to you, Benga. Thank you very much for coming.
Thank you very much, Dr. Dushote, for having me. Thank you for bringing me to meet with distinguished doctors, distinguished ladies and gentlemen. I'm so delighted to be here. It is good to be able to share ideas, to be able to share knowledge. And today, I've been told by Dr. Dushote that what we need to discuss today is funding opportunities for healthcare practices, funding opportunity for healthcare services. And we shall spend the next 30 minutes talking about it so that we can have ample time to answer questions or receive comments so that we can enrich the body of our knowledge. I would also I'd like to learn from you about issues and perspectives, because everything in life is about perspectives. There are things we may think we know, but we may need clarification. Today, we may have the opportunity to also ask those questions to clarify things we think we know, which we need to clarify. So it's good to be here, and we shall be talking about funding opportunities for healthcare practices. Now, funding, people think funding is the most difficult part of starting a business. There are so many times, Dr. Ushote will just see me and say, people have ideas, but it is the funding that is the problem. And I've told him severally that funding is the least of the problems. And I don't know if anytime I said that to him, if he believed me. But today, I want to convince him that funding is the least of the problems. The most important thing that we need to attract good funding is the business idea, is the business model. Money will chase after a good business idea. Money will not chase after an idea that is struggling, that people are struggling to understand. If you're going to come into the market to look for funding, and you are coming with a unique idea or an idea that has been tested and that has not failed in the marketplace, funding will usually follow such ideas. Let me repeat, funding is not the most important factor in running a successful business. Funding is just one of the factors. Having a good business idea is a prerequisite for attracting funding. Having an idea that has been tested and trusted, having a business model that has worked, especially in your client or in other clients, is a necessary prerequisite for attracting funding. When you have a proof of concept and you can see that this has worked elsewhere, money will come after such ideas, as opposed to people thinking that you must first go and look for the money and then you begin to fine-tune your ideas. It's not like that. So I needed to put that before all of us so that we can begin to look at it in that perspective. Now, let us go to the slides. So we have some slides that will help us identify the key things that we need to talk about. Now we are talking about our perspective, the overview of our funding environment, which are diverse. Nigeria presents a mix of private, corporate, and public funding environment for medical practice. So it's either we are talking of a private source, it's either we are talking of a corporate source or public to finance a medical practice. What are the key financing needs? Maybe your clinic setup, equipment procurement, working capital requirements. You have to pay your staff salary, or you need money to meet regulatory compliance, starting from setting up, getting registered with Nigerian Medical Association, obtaining licenses. You may need financing needs for all of this, without which you are not able to set up properly in business. And then what's financing landscape? What are the things, what are the opportunities available? We have our banks, we have our microfinance banks, we have impact investors or angel investors, we have venture capitalists, we have leasing opportunities, and government. Government is also in that field. Government is also in that space providing support, and then international funding organizations. These are the funding landscape. These are opportunities available for everybody in the funding landscape, and it is available for healthcare practitioners too. It's not restricted to any particular business. Healthcare practitioners are able to take advantage of the available opportunities in the funding landscape. And let us also look at some terminologies that we would use along the line so that we can have clarity. Term loan. What is term loan? Term loan can be used to finance acquisition of your equipment. It can be used to finance facility expansion. That is, if your business is already running, you can use term loan to finance your expansion. You can use term loan to finance the acquisition of your equipment, and then you can use term loan to finance your working capital needs. By working capital, ability to pay rent, ability to pay salaries, ability to stock up with drugs, ability to stock up with consumables, ability to even pay wages to people that are working, like the cleaners, the people that comes to remove your waste, your medical waste. Ability to do all of that could be curtailed. You may need funding to be able to ensure that you can pay those wages over time. Depending on the amount of money you are looking for, you may need collateral. Collateral in terms of landed property, equipment that you can pledge to secure your loan. You can, if you have a lot of receivables, these receivables can be the basis for obtaining loans or a facility from the bank. It can be discounted. For instance, if patients are owing you 10 million naira and you approach your bank and your bank is able to verify that those debts actually exist, it is also possible for your bank to make available for you 60 to 70% of the amount that has been verified that you are owing, that you are being owed. You are being owed 10 million. The bank, after verification, may be able to provide 6 million for you to hold the wheel of your progress, to increase your ability to meet your working capital needs. Now, your bank may also do credit appraisal to enable the opportunity to give you facility that may ease your cash flow. So a credit appraisal in that regard may be considered necessary. And then the volume of the patients you have, how many patients do you have? What is the regularity of the income that flows from the receivables from your patients? Because this determines your ability to repay whatever you have borrowed. Please, to borrow money, it is important that the lender is looking for your ability to repay. Nobody is interested in just throwing money after a business. Ability to pay back matters a lot. Nobody is interested in taking over your collaterals. What the bank will be interested in is, are you able to pay back if you have availed some loans? Not minding that you have pledged some collateral, but the important thing that is what is paramount is that which people don't really understand. People believe that, once you pledge your facility, your landed property, the bank wants to take it over. I beg to disagree. The bank will always use that as a last resort if you are not able to fulfill all the conditions attached to the loan. If your cash flow is good, the bank gives you money. The bank also expects you to fulfill the obligations that is attached to the loan, failing which the bank can then look at, how do we make sure that this loan does not become bad? So repayment is key. Ability to repay determines what the bank can avail you. Now, so repayment is key. For you to be able to get any loan from any bank or any support, you must prove that you have the capacity to repay. And the next slide will talk about the kind of financing that we can engage in. Now, that you run a healthcare practice also gives you opportunity to look at how to structure your financial need. For instance, you don't need to buy all your equipment with cash. You can lease. You can do a lease to own. You can, which a lot of people refer to as hire purchase. You pay a portion of the amount of money, and then you spread the rest over a period of time, depending again on your cash flow, depending on your ability to pay. There's no reason to set yourself on high jump. Everything must be dictated by your cash flow. If your cash flow cannot support more than, can only support a 24-month repayment, there's no point agreeing to a 12-month repayment. You are setting yourself on high jump and it will fail. You have looked at your cash flow. So ability to determine correctly your cash flow and say that, I know that come rain, come shine, I'm able to make this type of money in the next 12 calendar months, would also ensure that you can now pledge that these assets that I want to buy, I can pay over a period of 12 months. I can pay over a period of 24 months. If there's a mismatch between what your cash flow can afford and what you have offered the lessor, then there will be a problem. There will be a problem, there will be a mismatch. The agreement will fail, and then the person that has leased the equipment to you will come after you to come and retrieve the equipment, which is a very bad omen. Now, so leasing to own or hire purchase is a very good way of ensuring that you don't use all your cash to finance just one asset. What you want is to spread the cash you have. You can spread it and acquire about 3 or 4 assets and pay over time. And that ensures that you will have money to do some other things. Now, reduced upfront capital expenditure. You can preserve your working capital by making sure that you have enough. That's tied to the fact that you have released some of your equipment. You now have enough money to finance your working capital, your staffing requirement, your consumables. And then lastly, when you lease, there's a tax advantage for you. Apart from the fact that you have controlled the amount of cash that you are putting out there, you also have a tax advantage because the asset belongs to you. You have the ownership of the asset. You can also claim allowances, tax allowances that reduces your tax liability. So there's an advantage. Apart from making sure that you have cash to do many other things, with money that you have used to acquire just one asset, you also would benefit from the tax advantage. The next slide, we'll talk about our considerations. The consideration for microfinance bank and small business lenders. Some of us, we have relationships with some of these microfinance banks because we are, maybe our clinics, our hospital, our healthcare facility is still at its nascent stage. So we will tend to go patronize the microfinance banks because we believe that they are tailor-made and can meet our needs. And they have their own advantages. There's a faster approval process. They do not take as much time as the commercial banks. They are less stringent when it comes to collateral requirements. They are accessible to people that are just starting out in business, early stage practitioners, and you're able to build your credit history for future borrowing. I know of businesses that has used microfinance bank and they are doing extremely very well. There's a particular eatery on Adeni Jones that Money Points has helped to create about 5 branches. And this lending has been done without any form of collateral. You can imagine Money Points putting money behind a business that has transformed from a 1-branch outlet to a 5-branch outlet without asking the owner of the business to go and bring his father's birth certificate. So this is also available for healthcare practitioners, provided you show very strong corporate governance principles and you're able to keep records that will show that you have a business that is viable. So the issue of stringent collateral requirements is one of the things that patronizing microfinance banks would ameliorate. So their speed is faster, less stringent collateral requirements, accessible to start off. You know, all over the world, a lot of banks and financial institutions do not like to borrow money to people that are just starting in business because 80% of startups will die within the first 5 years of their existence. So Risk analysis shows that you don't lend money to those people that are just starting to enter into businesses. This rule is relaxed for microfinance banks because they are configured to take into consideration a higher level of risk than the commercial banks. Now, for microfinance banks, they have higher interest rates because they bear a lot of risk. If they waive collateral, it means their risk is bigger than the people that would naturally ask for collateral. There's usually shorter repayment tenor. So if you don't have cash flow that can meet up with this shorter repayment tenor, please don't go near them. Smaller loan amounts, they also put restriction on the amount of money that they can make available because of the kind of risk they are carrying. And then they may not be as flexible as the banks or other financial institutions. So for every one of them that you approach, you need to understand that there are reasons why they will operate the way they operate. So if you have a business that has not really taken shape and you go to a microfinance bank, the restrictions may be there, but they're also willing to help. Now let's talk about private equity, venture capital, and strategic investors. It is possible to embrace the use of target models to ensure that we can also get people that are interested. It is possible to assemble a group of investors and sell the idea of establishing a medical practice and then show the figures, show the business plan, show the profitability and sustainability. It is not only profitability that matters. Sustainability also matters. Ability to remain in business for a foreseeable future. So you don't show that the business is sustainable for 2 or 3 years, and then nothing happens after 2 or 3 years. That's why if you want to attract anyone, a private equity owner or a venture capitalist or a strategic investor, it is important to show a long-term view of the business that you want such people to come and invest in. A long-term view is usually taken to be like a 5-year period. You want me to invest today, I want to see what my investment will translate to in 5 years' time. You want me to invest today, I want to see how much the company that you want me to invest in will be worth in 5 years' time. So is it capital appreciation that I'm looking for? Even if I'm not getting enough dividend because of the teething problems that a company that is less than 5 years may have, will I get some level of capital appreciation in the value of the business? Will the value of the business appreciate if I invest 10 million naira in your business? At the end of the 5th year, what will this 10 million naira be worth? Will it be worth 20 million? Will it be worth 15 million? If I were to put the same amount of money in alternate investments, what you are offering me, is it comparable or is it at par with what I would have earned in other investment? That's the opportunity cost of having to come to you. If I'm coming to you and I'm not going somewhere else, that's somewhere else that I am not going, what will it offer me? So what are you offering me? There has to be some level of comparison between the value that your business would generate over a long period of years and as opposed to what it will generate if you were to take the same amount of money and put in the capital market or invest in another business. So it is possible, it is important to know that private equity owners, venture capitalists, and strategic investors don't just embrace businesses. Your medical practice, your healthcare practice must be positioned and configured in such a way that it gives long-term value to capital providers. Gone are the days when people put money in businesses and they go and sleep. And there is this erroneous belief that when you put capital in a business, you are not under any obligation to pay dividend. Times have changed. As a matter of fact, today, one of the most expensive source of financing is share capital. bringing people and asking them to invest in your business. As good as that methodology is, it's now very expensive because you can't take money off me and tell me to go to bed, to go and sleep and wait somewhere, and then dividend is coming. The first year, no dividend. Second year, no dividend. Third year, no dividend. There's nobody that would like to leave his money in that kind of business. So healthcare providers must also run businesses using all principles of corporate governance to ensure that businesses are not only profitable, but they are sustainable. Businesses are not only profitable, they must also be sustainable, because that's what gives a long-term value. Now, government has also come into this space. There are opportunities available for you from government. A lot of people think government is not doing anything, but I beg to differ. Bank of Industry is there. There are intervention funds that are borrowed to healthcare practitioners at single digits, and I've been involved in a few of them. There's Nigeria Sovereign Investment Authority. They also borrow businesses money with a track record. And there's Development Bank of Nigeria, DBN, and there is Nexim Bank, and there's CBN. And how they've supported businesses is also shown in the next column. The kind of support: soft loans at concessionary rates, guarantees for healthcare SME, grant-like support for expansion, technical assistance programs, and then intervention fund. These are available for healthcare practitioners. What it now requires is ability to know what will suit your purpose, is what is key. And for private sector partnership, public-private partnership, they are all over the place. For government procurement contracts, concession agreements, alternative financing routes, and expansion of businesses. We work for a company that has partnered with MTN over the years to do dialysis machines in major hospitals across Nigeria, and the thing has worked wonderfully well. It has worked wonderfully well, and it has helped a whole lot of people. And this partnership is between government, MTN, and the client that I'm talking about. So some of these things are available, and they also help to ensure that you don't carry too much load. Government is there to also support. There are additional financing options in the next slide. Leasing and asset-backed finance, we have talked about that. Supply chain and distributor credit, you need to establish relationships with your suppliers, with your drug suppliers, drug manufacturers. It is possible to buy drugs on credit and then pay over time. It is also possible to negotiate discounts by buying good volume and enjoy volume discounts. It reduces the amount of money you have to pay. It's a form of financing. I mean, buy now, pay later, depending on the volume that you are buying. You can also pool resources together in your industry and buy in bulk and share the pharmaceutical products. But because you have bought above a threshold, you are entitled to a level of discount that is in your best interest, as opposed to you just buying on your own and you are not able to buy beyond the threshold. So you are not entitled to a discount. So it is possible to buy now and pay later. It is possible to pool resources, buy the volume that would entitle you to some level of appreciable discount, like 10% discount, 15% discount, and this discount reduces your cost and improves your profitability. It is also possible to get angel investors and to fund specifically some of your endeavors. Angel investors are like venture capitalists. They come in, leave their money in your system for a long period of time, and then get out at a profit. And they will have stipulated all these terms at the beginning. If you are coming into your business for 5 years, this is how much we are introducing. And when we are getting out, this is how much we are going to get out to it. It will be farmed up, executed, and it becomes law. That's the way angel investors operate. All these things are possible if we have businesses that are profitable and sustainable, because your cash flow must demonstrate that. The concept, there must be proof of concept. You must show evidence that you have been in business, you have run a good track record, or you have a model that is novel and can be tested. These are very important considerations. Now, key considerations when you are seeking financing. When you are seeking financing, you must be able to prepare robust business plan. You must be able to prepare robust business plan. If you prepare it your own way, you must then seek professional help to fine-tune what you have prepared in your own way. But all the ideas must be put in black and white to say, this is what we want to do, this is our business model, this is how we intend to make money, and this is how we intend to operate. And you must have your revenue projections, which must be backed with very, very good assumptions. Your assumptions must be tested and must be reasonable. They must not be frivolous assumptions that put you into trouble at the end of the day. You must include payer mix analysis. What are you getting if you are going to patronize private insurance? If you are going to be doing patient outreach, or you are going to go, how do you intend to source patients? You must be able to do the mix. What is the mix of your clients? Are you going to go for corporate retainers? You must be able to state all of that. You must also conduct your sensitivity analysis to confirm the accuracy of your projections and the kind of cost. You must draw inference from existing businesses to be able to know whether your assumptions are reasonable, and then you must show a clear path to profitability and realistic repayment schedules. I've spoken at length about that. If you can't show that you are profitable and that your business is sustainable, please don't go borrowing. Don't go borrowing, because it normally will end in a lot of problems. Cash flow is key. Business plan is key. A business plan to support your cash flow projections, and your assumptions must be realistic and they must be assumptions that can be proven, and then they can fuel profitability and sustainability. Now, regulatory and collateral and creditworthiness. I have spoken at length about how to ensure that you can have secured lending. Some microfinance bank may not be looking for collateral, but it is important to note that commercial banks will usually ask for collateral. And the important thing about collateral is not that the bank wants to collect your asset. Bank does not want to collect your asset. If the covenants are met, if you promise that you will pay within 24 months and you're able to liquidate the loan, nobody wants to take your asset. So the bank, for ab initio, will be looking at, how do I ensure that this guy that wants to borrow money pays back? How do I ensure that this guy pays back? It is only when the payment is not forthcoming that the bank will resort to looking for how to convert the collateral. So there are regulatory and compliance readiness that you must, abide with. You must have your valid licenses and then practice permits to run a business that can be relied upon, because the bank or the lender will check all of this. You must have, if you are importing medical equipment, you must have import approvals. You must have tax compliance, because the bank will check. These days, the bank will check. Even the microfinance bank will ask for your TIN, will ask for your compliance with the relevant tax laws. You must also demonstrate ability to manage your risk and reduce funding friction. That you're not going to be borrowing money all over the place, and you have over-borrowed beyond the capacity that your business can take. A lot of people will take all sorts of borrowing, and at the end of the day, they are not able to pay back. It is important that you do not borrow, you do not bite more than you can chew. I've talked about collateral and risk mitigation. This offer physical collateral where available. Consider insurance, personal guarantees, or insured receivables. That is also very important. Then highlight strong cash flow, engagement and management, and billing discipline. Payer receivables, aging reports. I've talked about the ability to collect your debt from the people that are owing. The bank can lend you money against your receivables. If the bank sees that you have a good clientele, the patients that are owing, where maybe it is you have corporate retainer and they are going to pay anyway. So if you are owed 10 million, for instance, the bank may avail you credit to the tune of 60 or 70% of what you are owing, provided those people that are owing are reliable and the bank is of the opinion that the money will eventually come. So it's a form of collateral that is available. And then there's this credit worthiness and track record. A bank or a financier will not make available money to any practice that has very, very bad records. You don't keep good records, you keep the records, and those records are not even encouraging. You did 20 million naira worth of business, 5 million is outstanding, and they are likely to become bad debts. Nobody wants to give money to that kind of business. You have put the lender on inquiry as to your ability to manage your business in a manner that gives assurance that if money is made available to you, the money will not end up filtered away. Because if you have done 20 million naira business and 5 million is outstanding and you have no idea of when this 5 million will be paid, no financier would like to put money in that kind of business, because it is by your customers, by your patients playing, that you can also pay back the loans that has been availed to you. So it is also very important to understand that whoever is lending you money will be critical about your track record and your credit, and because it affects your credit worthiness. Then we move to the social impact and the total cost of capital. Now, for a public-private partnership and in the community, what does it portend? When government comes into this space to assist, there's a social impact that this is meant to give, because any alignment with government would ensure that you can be supported, and your business must be factored, or your business must be configured in a manner that your accessibility to the funding can be enhanced. I'll give you an example. Now, if government says for you to be able to benefit, you want to import some medical equipment, these are the records that you must submit, and you don't have those records, and you expect a public-private partnership to kick in. It will not kick in because you have not kept your records in such a way that government can see transparently what you are doing, or what that you are fulfilling the conditions. So for anything that has to do with government, all the intervention programs, there are conditions that must be met right from the onset. If those conditions are not met, then you cannot, the social impact that government is trying to put in place by making funding available to small scale businesses, upcoming businesses, you will not be able to. So it is important to know the conditions that is attached to these social impact programs that the government is putting in place. So when we know those conditions, we can meet those conditions from the beginning. You don't get to the end to discover that you have left things that you ought to do undone. So this is very important. The conditionalities for getting the social impact assistance from government must be met from the beginning. You do not get to the end and discover that you have left a lot of things undone. That is why compliance, regulatory compliance is key, and we can no longer run away from it. A lot of practitioners, a lot of businesses are run in a manner that they are not attractive to any funding. They know what they are doing, but nobody else knows. When you try to suggest that you should be doing this, you should be doing that, a lot of people don't take kindly to it. They think it's an unnecessary expenditure, it's an unnecessary increase in the overheads. Who will do all of this? It means I have to engage somebody, but there are benefits of keeping records in a manner prescribed, because that's what you rely on when the chips are down. So if you don't invest, put some resources behind keeping records in the prescribed manner, it works against you in the future, because you will not be able to access all the things you are supposed to access that will give you leverage to access the social impact funding. Now, let us talk about the cost of financing, the kind of cost that makes people run away from borrowing. And what are these costs? Interest rates and the effective yield. Sometimes when you see the interest rate, for instance, let's say the interest rate today is 28% per annum. There are charges that will be added to it. Admin charge, you find 1% flat. At the end of the day, you may be borrowing at 32%, not minding that you've been told that you are borrowing at 28%. When there are other charges added to it, your effective yield, your effective interest rate may become 32%. So if you are doing your workings and you are using 28%, you'll be shooting yourself in the foot, because your effective interest rate is actually 32% and not 28%. So you need to understand that there are arrangement and origination fees that will be added to this interest rate, legal and provisional fees, insurance premium, monitoring and reporting costs. These are all the costs that must be factored into your lending, because you can't just take the interest rate and ignore all of this. They all form part of what will constitute your effective lending rate, and they must be factored in so that you are not taking unawares. These are some of the issues that a thriving business must consider in order to be able to attract capital, the right type of capital for businesses. It's important for us to know all these costs so that we are not taken up by surprise anytime we are approaching a bank, financial institution, private equity, angel investors in financing our developmental needs. I will pause now so that we don't take too many things we don't come up with too many things, so that we can then do question and answer session. Thank you so much for your attention.
Thank you very much, my dear friend, for a very lucid presentation. So it's time to ask questions. So if you want to type in the chat box, that's welcome. And if you want to ask by talking, all you need to do is to raise up your hand digitally. I'll recognize you, and then you can ask the question. So there are two opportunities. You can type in the chat box, or you can raise your hand up digitally. I'll recognize you, and then you can ask a question. Thank you very much, Benga, for a very lucid presentation. So the floor is open for Q&A. Anybody, and so the floor is open. So I'm just checking if there's anything in the chat box. Okay, let me just bear the cat. So is age of the person, like for example, if somebody is over 60 and you want to approach an SME, a microfinance, would age to come before they give you a loan, or just your skill set or your cash flow or the ability to pay back will all they will consider? For example, you're a pensioner and you want to approach an SME to start a small business of your own after retirement. Thank you, sir.
Thank you. Age has got nothing to do with it. You are a pensioner and you want to approach a bank to set up a business. What the bank will be looking at is your business idea and the cash flow that will emanate from that business idea. Your business, because you may be coming as a pensioner, you may be coming with a lot of goodwill. You may be coming with a lot of experience. You may be coming with a lot of know-how, which can translate to fantastic cash flow. So your age does not have anything to do with your ability to set up a business that will not only be profitable, but also sustainable. Where your age comes in, if you are doing a mortgage, if you want to do a mortgage, banks may say, oh, you are retired, you are a spent force. Why would we do a mortgage, a 25-year mortgage for a 60-year-old man? I hope you understand what I'm saying. If a 60-year-old man wants to borrow money to buy a house and pay over 25 years, it means you'll finish paying at 85. So the bank may be careful about availing you a mortgage to do a property because of your age. But if you are financing a business, these real assets, these fixed assets that you are talking about can be financed in another way if this is going to generate funds for you. So age is not the most important consideration here. It is, how do you repay? From where will the cash flow to repay come from? What is this business idea? What in cash flow will this business generate? Once that is established, once it is tested and found to be reasonable, the financials will go for it. Financials are looking for, how do I get my money back? How do I get my money plus some interest back? If I invest in this business, if I invest in this person, does he have what it takes to run a profitable and sustainable business? That is what is key.
Thank you very much, sir. There are questions on chatbot. Let me just read one of them. Sorry.
Okay.
Are you done?
Yes, I'm done.
So my question is that there are grants available for healthcare practice setup. How can one apply and get it? That's one. Two is, thank you for this very useful presentation. Please explain again what you suggest partial leasing gives tax benefits. What kind of tax? What they are trying to say that if you lease an equipment, how do you take advantage of tax benefits from that kind of setup? I think the last one is, what will be the average? So what will be the average interest rate of medical loan from CBN or National Sovereign Fund? Any idea? So there are three questions. So one is, how do I assess these grants? Two, for equipment leasing, how do I take advantage of tax benefits? And then interest rate from CBN or National Sovereign Fund. So we'll take those three and then we'll continue, sir.
Thank you. Grants, you can apply for grants through your commercial bank. Whichever bank you are using today would apply on your behalf to CBN. You cannot, on your own, apply to CBN. That application has to be submitted to CBN through your bank. So your bank will give you the leeway and send your application, because the money will also be disbursed through your bank. So you need a very strong banking relationship, because your bank is going to recommend you for that grant, and the money is going to be disbursed through your bank. So that is why you need very good corporate governance structure in place, because your bank must first and foremost be convinced that you actually would require these grants. That's number one. The benefits accruing from leasing has to do with your ability. If you lease an equipment, the beneficial ownership resides with you, for which the tax authorities will give you some allowances to set off against your profit. Because you have leased the equipment, the lease interest is also tax deductible. You can take away the interest that you are paying from your profit. You can use it to reduce your profit. That's number one. Number two is that you can be given allowances to set off your tax liability. It's called capital allowances. So you see, there are two ways. Tax, the interest that you pay on your lease rental is tax deductible. When it is put into your profit and loss account, the tax authorities recognizes it. It will not be disallowed. And then you will be given some special allowance for using those assets to generate business and to generate income for your business. So these are tax benefits of leasing. And then the interest rate for such intervention funds is usually single digits. I know of interest rates that are not more than 9%. 9% interest rate. They are usually single digits. So those intervention funds come at single digits. I hope I've answered the three questions.
Yes, sir. Thank you very much. So somebody says, must you always use a consultant to assess this loan or any of those, somebody who must consult for you?
If your financial literacy level is above average, you may do it yourself. If you're able to keep records in the prescribed format, you can do that yourself. Nobody is going to insist that you must use a consultant. But when you know that you don't have the capability to do what is required, you don't have the capability to keep records in a particular form, you don't have the capacity to do a business plan, you don't have the capacity to do cash flow projections, then you must seek help. But if you can do these things yourself, or you have the above average financial literacy skills, why not? You can do it yourself, provided it will meet the standard required. So it's not compulsory to go and be looking for any consultant, provided you can do it yourself.
Thank you very much, sir. Somebody is asking here again, is it easy to get a loan from CBN or you must have connection to get it? There must be Niger connection. Must you have that before you can get this one?
Well, what I would say to you is that I know businesses that got this intervention fund without this kind of connection we are talking about. Part of the problem we have as a people is that we will not do our part well. We won't do our part well, and we expect to get what we require. The first thing I would say to you is that just play your own part well. Keep the records in the prescribed manner, provide the reports in the prescribed manner, and we need to do that first. Most of the time, people don't do what they ought to do or what the books prescribe. And then when they don't get the necessary results, they think it is because they don't know anybody. I beg to differ. Some of the times we don't get what we want because we didn't do what we are meant to do. If your business is attractive, if the records are kept, if they are produced in the right format and they are of the right quality, chances are that you will get whatever you want. So rather than dwell on whether you have connection or you don't have connection, just play your part well. Keep your books well. Do your planning well. If you do not have a good business plan and you are hoping that it is because of who you know that your application will be approved, I think there may be a problem there. So let us do the right thing. Keep the necessary records, prepare the books in the format prescribed, and then I believe that there are chances that your application will sail through.
Thank you very much, sir. Any other question or comment before we close this meeting? I just want to give us opportunity. I have my own few takeaways from this meeting. I'm just looking for any other comment, questions. Okay, there's a hand. Prof, please go ahead, unmute and go ahead, ma.
Thank you very much.
Thanks
very much for this excellent presentation, which is very special. Obviously, you are a consultant here. And can you tell us how we can get in touch with you? Because many people don't just, we can't get the gist at one sitting. You know, what we need is a follow-up so that we can come and see you and pay, of course. Have you set up your own consultancy? If not,
he's a big boy, ma. He's a big boy, ma.
If not, can you recommend consultants, financial consultants?
So let me allow him to speak for himself. He's of age to speak for himself.
Thank you, Prof. This is what we have done in the past 30 years. We've been in this business for 30 years, and we have a thriving practice, and we shall be willing to assist anyone that desires the assistance. We will share the slides that we have just presented, and the slides contains our phone number, emails. So anyone that is desirous of some level of assistance can also get in touch with us. And then Dr. Dushote is the pathfinder. He also would be able to link you with us in case you need any assistance. So in addition to finding the details on the presentation that will be shared to everyone that is there on this presentation, Dr. Dushote is also an additional source to us. Thank you very much, Prof.
Thank you. Just to say that I was encouraged to ask because you told me that there is no age limit.
No age limit.
No age limit.
No age
Depending
limit.
on what I want to do. All right. Thank you.
Thank you, Prof, for always being here to support us on this platform. Thank you very much, man. And by the way, Prof is joining us from America, so that's a huge sacrifice for her to be here. Thank you, man, for always supporting this initiative. Somebody put on the chat box that he wants to be part of this group. So what you can do is, if you are not on the WhatsApp group, just reach out to me. I'll put my number on this chat now, and then you can reach out to me. And it's not a big thing. I'll put you through. We are looking for people to be part of our group, and you are welcome. So I'm going to put my number on the chat now, so you can just reach out to me privately, and then I will do the needful. So thank you, everyone. Okay, sorry, I think there's some, okay, I think it's just, okay, no new questions. So thank you very much for everyone who has participated in this meeting. Dr. Elita, are you available to talk, or I should just go ahead? Okay, I think I'll just go ahead just to save time. So thank you for joining us on this platform. It's something we do every month. And today we just decided to serve something different because we believe as doctors, we need to be financially savvy. And my quick takeaway from this meeting, number one, you need to have a business plan, and you need a professional to help you to fine-tune your business plan. That age is not a limit. If you have a good idea, there will be funders out there to support your initiative. Number two is that there are intervention funds put in government that will not break your back, and that if you have good record keeping practice, then you can easily access funding. The thing that you need someone to hold your hands. And I also learned that you need to also have a good relationship with the banks so that they will be able to support you to access these funds. So in the absence of any other comments, we're going to close this meeting. This recording is available on our YouTube channel, which we also will share on our platform. And we're looking forward to seeing you next month for another robust clinical session. So thank you, everyone. And for our senior colleagues, Program Root, thank you for always being here to be part of this meeting, and all our senior colleagues, and to our Dr. Benga Badijo, my friend from way back. And I won't tell the secret between both of us. I won't tell them. Don't worry. We'll keep it in the house. So we appreciate at a very short notice, he agreed to be part of this, to share his thought with us. And we want to thank you for all you have done. And I'm sure this was translated to people reaching out to you to help. And I'll be your first customer. You can be sure I'll be the first one to come. So thank you very much for being part of this meeting. God bless you. See you next month. Thank you.
Bye.
Bye.